This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Payday wages are picking up. The unemployment rate is ticking down. Does today's jobs report seal the deal for a rate hike in December?
9 days of losses. The S&P 500 has its longest losing streak in 36 years. So how should you invest in this market? Our market monitor has some ideas.
And Heroes Vodka. Meet the former Marine turned entrepreneur who's raising a glass and building a company to help other vets. Those stories and more tonight on Nightly Business Report for Friday, November 4th.
Good evening, everyone. Welcome. It is the worst losing streak for stocks since 1980. More on that in just a moment. But we begin with jobs and wages. And if you've been thinking about asking for a raise, now may be the time. Today's employment report showed a pickup in average hourly earnings as businesses raise pay in order to attract a smaller pool of available workers. According to the Labor Department, the economy added 161,000 jobs last month. The unemployment rate ticked lower to 4.9%. Average hourly earnings rose 0.4% to the fastest annual pace since the end of the Great Recession. Hampton Pearson has more on the last jobs report before the election and what it may mean for Wall Street, Main Street, and the Fed.
There was an October surprise in the final jobs report before the presidential election, a pay raise for American workers. In the last 12 months, average hourly earnings are up 2.8% to just under $26 an hour, the biggest pay raise in 7 years, according to the Labor Department.
Workers have been looking for a meaningful raise for quite some time. They deserve that raise, and we're seeing this sustained evidence that they're getting it.
October hiring was led by 43,000 new hires in professional and business services, which includes mostly higher-paying jobs in engineering, accounting, and information technology. Healthcare also continues to be an engine of job growth, adding more than 39,000 new workers. The unemployment rate dipped to 4.9%. The biggest disappointment, manufacturing, which cut 9,000 jobs last month and more than 50,000 in the past year.
We're getting service employment, but not manufacturing employment. We're getting the lower paid wages rather than the higher paying wage industries hiring.
The combination of job growth with higher wages and signs of increased consumer spending could trigger the boost in inflation the Fed has been looking for.
I think if all of the inflation pressure that we get, it comes from wages, it's a great thing, it's a solid thing for the U.S. economy, and that companies have plenty of margin, room in their margins to absorb slightly higher wages, and especially if it leads to greater consumption.
Most Fed watchers say today's jobs report increases the odds for a rate hike in December. The biggest remaining X factor, market reaction to the outcome of the presidential election. For Nightly Business Report, I'm Hampton Pearson in Washington.
And speaking of the Fed reaction, today 2 Federal Reserve officials commented on the labor market. Vice Chair Stanley Fischer said the economy is close to full employment and raised the possibility that the Fed could overshoot its 2% inflation target. Separately, the president of the Atlanta Fed said the bar is now high for the central bank not to increase interest rates in December.
So let's turn now to Dean Mackey for more analysis on today's jobs report and what he thinks it may mean for the Fed. He is chief economist at Point72 Asset Management. Dean, nice to have you here. Welcome.
Thank you.
Let's start, first of all, with your analysis of the report. I noticed that there were upward revisions in 2 previous reports, which strengthens those, certainly. So all in all, it seems to look pretty good.
That's right. The job gains are relatively steady. They're at 175,000 on average over the past 3 months. That's more than enough to keep pushing the unemployment rate down, and that will please the Fed. And what we're finally seeing is that fall in the unemployment rate is leading to substantial wage gains. And so this is exactly what the Fed's been looking to happen. And I do think this keeps the Fed on track for a hike in December.
How material is the drop in the labor force participation rate? In other words, you can have a falling unemployment rate if jobs go up or if labor force participation goes down.
Well, the labor force participation rate's been trending down for for quite some time now, and that's mainly being driven by demographics. The population is getting older, more people are retiring. That's going to continue for another decade or so. So I think that the up or down month to month is less important than that trend. The trend is actually slightly up over the past year as some people have come back into the labor market. But I think the unemployment rate means what it usually does, and that's why we're seeing wage gains pick up.
There are those who say, though, that there are a lot of disenfranchised workers who have left the labor force and therefore they are not counted, and then that could skew the number.
There certainly are those people out there, but what the numbers tell us is that the vast majority of people that are not working are those who say they do not want a job at this point. Most of those people are retired or doing other things. So I don't think that there is this large pool of people ready to jump back into the labor market the minute wage gains pick up.
You know, it's interesting. I've thought about this a lot. Being a baby boomer on the cusp of the age where some people retire, I'm not retiring a long time, Dean, but I've thought that labor force participation was being pushed by people leaving voluntarily because they were retiring. One of the Fed governors said that the bar is, kind of curious locution here, the bar is high for not raising interest rates. That basically means we're going to raise interest rates. Do you see it that way for December?
That is very likely. I think the only thing that could knock the Fed off course were if the results of the election, for example, led to a lot of market uncertainty, a lot of markets in chaos. That kind of environment the Fed doesn't typically want to raise rates into. But if that doesn't happen, if the data stay where they are, the markets are doing okay, then the Fed almost certainly will raise rates in December.
All right, Dean, thank you so much. Have a great weekend. Dean Mackey with Point72 Asset Management.
The trucking industry is one part of the economy that is not creating jobs, and experts are paying close attention to what's happening in this enormous and vital sector. Morgan Brennan has more.
While UPS and FedEx can't hire enough workers for the holiday season, it's another story for the companies hauling freight. Today, the Labor Department reporting the manufacturing sector shed 9,000 jobs in October, including several thousand in transportation equipment. It's the latest sign that the freight slump isn't letting up, and it comes as demand continues to plunge for new trucks. Market forecaster ACT Research says October orders for tractor-trailer trucks tumbled nearly 50% from a year earlier, extending a months-long rout of the weakest activity since the recession.
The orders we saw in October, the just below 14,000 unit orders was particularly weak when we seasonally adjusted, as October is typically the first month of the peak order season.
After a strong 2014, trucking fleets ordered more vehicles, anticipating an upsurge in freight demand that never quite materialized as commodity prices and manufacturing nosedived. That led to too many vehicles on the road and just as broader economic growth slowed. But this is typically the busy time when trucking executives assess their fleets and place orders for the upcoming year. Instead, the biggest firms, including Werner Enterprises and Swift Transportation, have been pulling trucks, hundreds of them, off the road. While ACT Research expects to see some modest improvement in 2016's final 2 months, it still doesn't bode well for next year.
We certainly haven't seen any indications that freight's coming back around, and I think for improved freight, we really need to see better commodity pricing, which is going to drive the machinery sector, because the number of widgets that have to be moved when you're building big machines really generates a lot of freight that the truckers are hauling.
The slump is also affecting earnings. This week, transmission maker Eaton slashed its production forecast, and Cummins CEO told analysts the engine maker is hearing from, quote, lots and lots of fleets that they're delaying purchases. With nearly 70% of goods in the U.S. moved in this way, trucking activity is considered a leading indicator of U.S. economic growth, making reports like these all the more pressing. For Nightly Business Report, I'm Morgan Brennan.
On Wall Street, stocks slumped into the close, dragging the S&P 500 to its 9th consecutive decline. That's the index's longest losing streak in 36 years. And it was a down day all around on continued uncertainty surrounding the upcoming presidential election. So when all was said and done, the Dow Jones Industrial Average lost 42 points to 17,888. The Nasdaq was off 12 and the S&P 500 fell 3. For the week, all of the major indexes fell.
Wells Fargo's sales scandal could extend to its brokerage unit known as Wells Fargo Advisors. In a letter to the bank's CEO, 3 senators questioned the company's disclosures about the dismissal of workers from that unit. So far, Wells has characterized that fake accounts scheme as a problem isolated in its retail banking business.
Drug makers are feeling the heat. 2 senior lawmakers sent a letter to the Justice Department requesting an investigation into possible collusion. Now, this follows a report we told you about yesterday of a probe into price fixing at a number of generic drug makers. Meg Terrell has more now on these new accusations.
Senator Bernie Sanders and Congressman Elijah Cummings are asking U.S. regulators to investigate whether makers of insulin colluded on pricing.
We're early in the pricing debate. There have been more than 500 drugs that have raised the price more than 15% so far this year. So there are a lot of them. And clearly, anyone who's raising price too much, that should be something that people look into and have some sort of say in that. Secondly, if you have collusion, everyone agrees. If there's known collusion, go after it.
Sanders and Cummings highlight 4 companies in their letter to U.S. Attorney General Loretta Lynch: Eli Lilly, Sanofi, Merck, and Novo Nordisk, all makers of drugs for diabetes. The congressman cited a tripling in the price of insulin between 2002 and 2013, from $231 to $736 per year for each patient. They also note identical increases for drugs like Sanofi's Lantus and Novo Nordisk's Levemir, rising in tandem 13 times since 2009. They write, quote, "We are concerned that the potential coordination by these drug makers may not simply be a case of shadow pricing, but may indicate possible collusion, and we believe this egregious behavior warrants a thorough investigation." The drug makers disagreed, all saying in statements they set prices independently, in compliance with the law. Merck pointed out it doesn't even make insulin. And all 4 pointed to discounts on their drugs, keeping actual prices lower, a familiar theme as drug companies try to shine a light on the rest of the system, specifically on pharmacy benefits managers, or PBMs, which negotiate those discounts.
Everyone's asking for more transparency. And if there's going to be more transparency, one of the places that it has to come up is with the PBMs.
With the election just 4 days away, industry watchers say regardless of who wins, the political focus on drug prices will likely continue. For Nightly Business Report, I'm Meg Terrell.
Still ahead, finding opportunity. A 5-star fund manager who is outperforming the market will tell you which stocks he likes right now.
Samsung is recalling nearly 3 million top-loading washing machines following reports of injuries. The Consumer Product Safety Commission said the top part of the machine can detach from the chassis during use. There have been reports of more than 700 excessive vibrations and 9 reports of injuries, including a broken jaw. The company recently sued by customers who allege their machines explode during normal use. This follows the recall of 2.5 million Samsung Galaxy Note 7 smartphones because of a potential fire risk.
China's Wanda production company plans to buy Dick Clark Productions for about $1 billion. This marks the company's first move into TV production. And as we have reported, it follows a big push by the Chinese conglomerate into Hollywood. The Dalian Wanda Group is run by China's richest man and owns the AMC Theaters, Legendary Entertainment, the production company, and it recently announced a partnership with Sony.
The market for competitive gaming is growing rapidly, and Activision Blizzard is making an even bigger investment in it with the creation of a professional e-sports league. And as Julia Borston reports, it's getting the attention of some NFL owners.
Activision Blizzard's Overwatch game has been a runaway success since it launched in May, with more than 20 million players around the world. And now the game maker is making a move to tap into growing demand for esports.
The Overwatch League.
Creating a gaming league for Overwatch, selling franchise teams to compete in that league starting next year.
Activision has several titles that are very well suited for esports, and now they're going to be able to take advantage of that by creating an esports league, offering broadcast rights and advertising, as well as creating more revenue from in-game purchases. believe it or not, people are going to be buying jerseys and other virtual goods.
Activision's Overwatch teams are drawing a range of interest, including from traditional sports team owners. Patriots owner Robert Kraft and Rams owner Stan Kroenke were among those who attended Activision's presentation to prospective team owners today.
Welcome to BlizzCon 2016.
The presentation about the new league was held at BlizzCon, Activision Blizzard's annual convention that drew a sold-out crowd of 25,000 gamers, plus another 10 million plus people streaming the event online and watching the esports competitions underway. Research firm Newzoo says esports has nearly 150 million fans, with nearly as many occasional viewers, as this multi-billion-dollar business in the making is starting to steal viewership away from traditional sports viewing. And Activision is particularly well positioned.
Esports is critical for Activision in the sense that it's a way for them to generate significant incremental revenue. So our estimate is that they're going to generate potentially as much as $300 million or more in revenue over the next few years.
It's an area where Activision has been investing, buying Major League Gaming in January to live stream tournaments like a September Call of Duty championship as if it were a traditional sport, to try to build a business at the same scale. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Medicare helps Humana top estimates, and that is where we begin tonight's market focus. The health insurer said an uptick in membership in its Medicare Advantage business lifted profit and revenue above expectations. That's the unit that sells plans to the elderly and people with disabilities. Shares finished today up better than 1% to 167.42. Regeneron Pharmaceuticals posted a higher than expected profit thanks to sales of its cholesterol medication and a lower tax bill. The biotech company also saw a revenue increase, but those results were shy of estimates. Shares rose more than 1.5% to $341.39. And the diagnostic testing company Alair said its medical equipment unit had its Medicare enrollment revoked following findings from a government agency that the unit submitted claims for deceased patients. Medicare doesn't like that. The company is appealing the decision. Separately, the company posted weaker than expected earnings for the latest quarter. Alair fell 14.5% to $36.10.
The analytics company Nielsen said its previously released data regarding cable viewer estimates for the month of November was accurate. Included in those estimates was sports cable channel ESPN, which saw a viewership decline of more than 600,000, the worst performance in that network's history. Disney disagrees, telling CNBC the data is, quote, an anomaly and inconsistent with much more moderated trends observed by other respected third-party analysts. Disney shares fell just about 1% to $92.45. And Berkshire Hathaway said its operating profit and revenue rose in the latest quarter, with results being helped by strength in the conglomerate's manufacturing and energy divisions. Despite those upbeat results, net income saw a decline. The shares fell slightly in after-hours trading. They finished the regular day down fractionally to $214,545.
And now to our market monitor, who has some names he says you might want to own if you're worried about stock market volatility. This is his first time joining us on the program. He's Alan Bond, the top-performing co-portfolio manager of the Jensen Quality Growth Fund. It is up nearly 8% this year. Alan, welcome. Good to have you with us. Let's begin with this pesky losing streak that we're in the midst of with the S&P and the other market averages. Is this the start of something bigger, worser?
Well, it's certainly unprecedented for a long time. This is the first time in 30 years that we've seen the market sell off for 8 straight days. And there's probably some election uncertainty in there. The election's obviously tightening. You know, the question for us is stock pickers is what kind of stocks do we want? And for us, it comes back to quality growth stocks in this kind of environment. Stocks with free cash, high returns on capital, and consistent business models that can thrive regardless of the geopolitical environment.
All right. Have you been adding to some of the positions? Let's talk about the stocks that you're recommending tonight. Waters Corporation, you say it's an all-weather company that can hold up if you're concerned about volatility, and we certainly are seeing that right now.
Yeah, Waters is a bit of a sleepy company, but it's one of the world's leaders in the scientific tools that are used by pharmaceutical businesses to conduct research and quality control testing on both branded and generic drugs. And it's a business model defined by high customer switching costs. About half the company's revenues are somewhat recurring in nature. generate a lot of free cash, have been around a long time, and have been a consistent company. We think it's a great company for any environment. The stock sold off a little bit last week after earnings, so we think the entry point right now is very attractive.
Your second pick is also has revenues that are sort of recurring in nature. Sounds like a theme of yours, Ecolab. Why do you like?
Sure. So Ecolab is the world's leading supplier of sanitation chemicals sold to large institutions such as hotels and restaurants for their cleaning needs. They dominate the world's market. They're about twice as big as their nearest competitor, and it's a scale business, so that's important. What's interesting about Ecolab right now is they do get some sales from energy end markets, and that we see that business with the oil market stabilizing. We see that business troughing, and we think the company as a whole is positioned really well for acceleration of both revenue and earnings as we enter 2017.
Let's move to Pepsi. I was kind of surprised to see it on the list, but on the other hand, you say that, you know, it's a global brand, not just a domestic brand, and so it has revenue from a lot of different areas.
Yeah, Pepsi's a great one for that volatility thing that you were talking about at the opening here. Very well-known company, deep competitive advantages from brand strength, channel strength throughout the world, very diversified business model. You know, we like it for its free cash flow attributes, its consistency. It's raised its dividend for 43 consecutive years, so a very steady story. But in volatile times, if we're concerned about volatility, it's a stock that has shown it can hold up very well in volatile markets. So we think that's a great short-term angle. And the long-term play for us, it comes back to its quality.
All right, Alan, thank you so much. Have a good weekend. Alan Bond with Jensen Quality Growth Fund.
Coming up, it's made in the USA and made by a former Marine. And this entrepreneur had the bright idea to use his business to help other vets.
Veterans Day is a week from today, and U.S. military vets own some 2.5 million businesses, generating more than $1 trillion in sales each year. Vets have started companies like Walmart, Nike, and FedEx. But one ex-Marine in Nashville, Tennessee, got the bright idea to make it his business to give back to vets and their families full-time.
Travis McVeigh considers himself pretty lucky. As a Marine, he was chosen for the Presidential Honor Guard, serving in the late 1980s and early 90s. His two best friends weren't as lucky. Richard Gaston went on to become an Indiana State Trooper, but was killed in the line of duty. And Thomas Rabjohn, a policeman and Army reservist, was called to active duty and died in Afghanistan.
It was just devastating. I go through those emotions when you lose someone, through grief, through anger, feeling guilty for not being there, but finally I was inspired to do something.
McVeigh spent a total of 8 years in the Marines, then 15, working at a Tennessee tire factory. On the side, he dabbled at home, making his own vodka. He dreamed of selling it and donating money to causes that help military veterans. But why vodka?
Vodka you can make today and sell tomorrow. You don't have to age it. It's gender neutral, it's seasonless, and it outsells all the other spirits combined.
McVeigh spent more than a year and about $80,000 tweaking bottle designs, a sales pitch, and his corn-based recipe. He says corn makes a smoother vodka, but getting his Heroes vodka into stores was no simple feat. So he called a local expert, Robert Lipman, whose family founded the first distributor of Jack Daniels back in the 1930s.
Robert actually answered his phone that afternoon. He said, I've got 100 different vodkas in my warehouse, but I'll give you 20 minutes since you're a veteran.
20 minutes was all it took.
What always drove me is the memory of my two friends. If they can give their life for this country and all the other men and women that serve every day, I can try and start a business and do this.
Lipman was hooked, so he invested in Heroes, betting McVeigh's story would sell. Heroes vodka went into production on Veterans Day 2011, 11/11/11. In early 2012, about 300 Nashville retailers and restaurants began selling. Now available in 15 states, Heroes sells for about $15 a bottle.
When I first sat down and spoke to Travis, I said, man, you know, you're climbing a pretty steep hill.
In 2013, Leonard Phillips became the first New York City retailer to carry Heroes.
he was not going to be deterred. He said, I'm going to do this. And I said, well, you've got my support.
15,000 cases and close to $1 million in sales later, Heroes expects to be profitable next year. But even without profits, Heroes is already donating nearly $60,000 so far, mostly to AMVETS, a nonprofit chartered by Congress to help American veterans and their families. And while McVeigh's story sells, he's heard from a few detractors too. Some say he's exploiting his military background. Others make him painfully aware of the alcohol issues faced by so many vets.
We're just like anyone else. Some people have a problem with alcohol, some people don't. And I believe in freedom of choice. And also, I tell people, if you have a problem with alcohol, I don't want you to buy my product, period.
Just this week, McVeigh was named Veterans Business Advocate of the Year by the National Veteran-Owned Business Association, an honor as he answers his new call of duty.
But I tell people, never start a business just to make money. Start a business to make a difference. Yeah, cheers.
Good advice there. In the future, Heroes plans to donate 10% of its profits. McVeigh, who also wrote a book about country singers who've served in the U.S. military, hopes to have Heroes vodka for sale in 30 states by the end of next year. He is entering a crowded marketplace.
Yes,
there are a lot of vodkas, but his price point, $15 a bottle, pretty moderate.
Well, I hope if some people in those other 30 states that don't have it, they see your report and they'll do it. That does it for us for Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Mathisen. Have a great weekend, everybody, and we'll see you on Monday, the day before Election Day.
That's right.